Hello and a warm welcome. You've joined us on Buy Now, Sell Now right here on ET Now. I'm Ashesha Azwari. With me is Ankita Saxena, and this is a show where we answer all your queries, so keep sending them to us. But before that, let's have a look at how the markets are faring for the day, and it's absolutely flat as we speak. Nifty, in fact, is up marginally, nearly 8 to 9 odd points, but still above that 25,100 mark. Sensex, in fact, has slipped into the red. Nifty Bank also underperforming in trade today, down nearly 230 points as we speak. In fact, Nifty Bank is down 0.4%, below that 56,700 mark. So, turning out to be quite a volatile day. In fact, we have recovered from the lowest point of the day, but despite that, Nifty absolutely flat as we speak. In terms of individual sectors, we have IT sector, which is leading from the front. Nifty IT index is up nearly 1.5% as we speak. Coforge up more than 3%, followed by Persistent Systems, which is up a solid 3% in today's trading session. Tech Mahindra, LTI Mindtree, Emphasis, HCL Tech, all of them gaining in excess of 1.5% in trade today. On the flip side, though, we have PSU banking stocks which are under pressure today. Remember, after the solid bump up that we saw on Friday, PSU banking stocks were gaining yesterday as well, but today we are seeing some kind of reversal in the trend. Nifty PSU banking index is down 0.1%. We have Indian Bank, which is down over 4%, Union Bank, Bank of India, Punjab National Bank, Bank of Baroda, all of them reeling under pressure today.
Alright, so that's how the construct of the market largely looks like. And as far as the frontline index is concerned, very range bound. In fact, we are pretty much within the previous session's range. But let's get started with all those stock queries. Then you can start sending in your questions on the number that is flashing on top of your screen. You can send in your stock query, the buying price, and the holding period, and we will get your questions answered by our experts. And speaking of the experts, we are now joined by Kunal Botra and Shaina Mukaddam, who's an independent analyst, joining us now. Hi, good morning to both of you. Thank you so much for joining us on the show. Well, let's get started with all the questions then. First one is coming in from Geeta Anand, who's writing in from Delhi. She's saying that she holds a Polyplex 20 shares at the buying price of 1,376. She's been holding it from 2022. She wants to know if she can sell it or she can invest in some other stocks if she had to sell Polyplex. Let me come to you, Shahina, on this one.
I think she should hold it for now, because we are seeing a bit of rebound after the good correction that we've seen in the last couple of months. And in terms of valuation also, it is not expensive. Price to book is just about 1.1 times. So I would say, the opportunity looks better going forward for Polyplex. So it's a hold.
Okay, so hold rating coming in on Polyplex, but we have Rohit Srivastava, who has written to us from Prayagraj, Uttar Pradesh. He has a question on Ircon International. He's holding about 10,000 shares at 200 rupees per share. He can hold on for 6 months or so, and he's asking whether we could see further upside on this stock. Kunal, what will your view be on Ircon International?
Yeah, my view would be bullish on Ircon, and I think after this move which you've seen the stock breaking above its longer term averages and crossing levels of 200, you could now place a near-term target, or the next target for the stock closer to the previous major high, which is around 230 to 240 range for Ircon. So that could be a near-term target range which you can keep for the stock.
All right, so that's Ircon on the charts. But let me come to you, Shaina. This is Jayesh, who's writing from Mumbai. He's purchased 400 shares of Delivery, and this is for long term. He bought it at a price of 389. Can he add more at current buying price? Delivery, what's your take on that?
Delivery, for the longer term, it's a concept stock. Valuations are a bit expensive, but there's a lot happening also in terms of competition that is increasing. So I would say, yeah, you can add, but the stock has been moving up quite well in the last couple of weeks. You can add, but I would prefer if he adds it at a slight dip, maybe closer to about 350, 360. I think that would be preferable. But add at lower levels.
Add at lower levels, that's the view coming in on Delivery. But let's shift focus and let's put the spotlight on Indian hotels and ITC hotels. We have Ayush, who has written to us. He's asking whether it is a good time to make or to add to his positions of Indian hotels, which is IHCL and ITC hotels, for the next 3 to 4 years. And he's also saying that his average buy price for IHCL is 505. For ITC Hotels, it's 207. Shahina, what will your view be on this stock?
Both the hotel stocks look good for the medium to longer term also. I think the business opportunity is good. Of the two, I would prefer ITC hotels, which I also personally hold, but from lower levels, because in terms of valuation, it is still more attractive versus Indian hotels. And the growth in ITC hotels is also likely to be good. They've already got 13,000 rooms and they are looking to expand over the next 5 years quite substantially. So I would say first preference ITC hotels. Second, of course, Indian hotels is a marquee stock for the long-term investor.
All right, moving on then, coming to the next counter, Kunal, this one's for you. Ayush is writing in. He says that, I beg your pardon, this is Sumantra who's writing in from Delhi. He's holding 5 shares of Trent. He's bought it at a buying price of 6,900 few months back. He wants to know if he should hold it or should he exit it. Now, Trent has been a very good investment stock, and we have also seen considerable correction post that high run up that Trent has seen. But now, Kunal, what do you see on the charts for Trent? Is it a hold or should he exit?
See, it's a hold, but then there are multiple things which you have to be aware of. One is that after such kind of a steep 50x kind of a rally in the last decade and a half more for Trent, the stock would get into a major time-wise consolidation. You could be in for maybe another couple of years of the stock remaining a sideways or maybe broad-based in a major or a massive range. Like for example, the recent low which the stock tested was around the 4,600 mark, and the all-time high levels for Trent is around the 8,000 to 8,500 kind of a zone. So it's possible that the stock may continue to remain to this band of 3,000 to 4,000 points for the next couple of years. So you have to be a bit more strategic at which levels you are looking to buy the stock. You can't be looking to buy the stock at every levels on the upside because of the way the stock can possibly go into a time-wise consolidation. And on the other hand, I think you should try and take advantages of corrections as a good entry point. So whenever the stock dips down, comes close to this major support which I highlighted, or closer to that kind of a zone, say with a margin of 5% to 10%, good zone where you should look to average.
Okay, so that's the view coming in on Trent. It has indeed been a wealth creator over the last few years. But Anirudh has written to us from Pune. He's asking whether Britannia is worth buying at the current price juncture, and he has a medium-term time horizon. So, Shahina, this question will be for you. What is your view on Britannia or any other FMCG peers?
I would say FMCG is a sector which has not really performed in the last couple of maybe a year and not. And I think the time has come now. We have had good monsoons. There is more money in the hand of taxpayers going forward. And also, I think in terms of Britannia specifically, the stock does look good. I would say he can, if he's already holding, he should continue to hold. I would say a target close to about 5,850 over the 6-month period. That is what his question was, is possible.
So that's the take coming in Britannia and the FMCG basket. Kunal, let me come to you then. This is Ella Moza who's writing in. Now, Ella says that she has Adani Enterprises that was purchased in June 2024, 13 shares at a buying price of 2,939. Should she buy more stocks at current price to average out? What is the growth prospect for this, if any?
So not really. I would not suggest an averaging out further for Adani Enterprise because the stock has been a little bit more sideways, muted in terms of price action. So when the earlier nature of the stock price changes, that's where we believe that the trends for the stock price drops down significantly. So I think in this case, from being an extreme high beta stock, the stock has come back into a low to moderate beta zone. So which means that the stock could be a lot more sideways rather than a major trending stock. I think in that anticipation, I would suggest just avoid to add further. Whatever quantity you are holding onto the stock price, just continue to hold that.
Okay, so that's the view coming in on Adani Enterprises. But we have Ashwini Bhatia who has written to us from Lucknow, Uttar Pradesh. This is a long-term question. He's having about 120 shares of Tata Motors, which were bought at an average price of 690 rupees per share. He's asking whether he should continue holding Tata Motors for the long term. Shahina, what will your view be?
I would say that he should continue holding. There are some issues in terms of raw material, the availability of certain rare earth magnetic raw materials that would be necessary, especially for CVs. But hopefully those issues should be sorted out. And I would say Tata Motors, in terms of balance sheet, they are improving, they're reducing the debt. Also, in terms of the the listing of the separation of the two businesses, PV and CV, is likely to happen in the near term. I would say it's a good hold.
All right, a hold coming in on Tata Motors, but moving on to the next question then. This is Ashwini Bhatia who's writing in from Lucknow. This is Catherine who's writing in from Mumbai. She says that she wants a view on Angel One broking, a short-term and long-term view. Kunal, will come to you first for the short-term view, and then for the long-term view, we'll come to you, Shaina.
So from a short-term view, I would believe that Angel One looks attractive. In fact, after this, there was this theme where capital market stocks were actually looking fairly attractive, and that was the point where Angel will start to look attractive in terms of a breakout. The stock did pretty well for itself. Post that, you're seeing a couple of days of a consolidation patch for Angel One. So it's a good stock from a short-term play, but I think buying on dips is a strategy which I'd advise for the stock.
Right, Shaina, coming to you. What is your view coming in on Angel One? The management has also guided for normalization of business and the operating margins, by FY26. Given that, does Angel One look good to you as well?
Yeah, I would agree. I would say that the margins, the business, after the bit of correction because of changes in regulations, has actually taken place, and we've seen client addition taking place. I think across the sector, both in terms of stock exchanges as well as in the participants who are there in the business, brokers, broking companies, all are doing well. And I think Angel One is well positioned in that space. So yeah, I would agree, it's a good hold.
Rating coming in on this brokerage company Angel One. But let's shift focus to the pharma sector, and Satya has written to us, and this question is specifically for you, Shahina. What is your view on Aurobindo Pharma? So that's the question on Aurobindo Pharma and the sector in particular.
There were some issues actually which impacted the overall sector in terms of sentiment, where the US government did indicate that they would be relooking at what are the tariffs for the pharma sector. But I think companies like Aurobindo, and specifically since the questions on Aurobindo, I think I do not think that there will be too much impact on either generics or even the specialty products for that matter. I would believe in terms of valuation, Aurobindo is very well positioned versus the other pharma companies. In terms of valuation, it is available much cheaper. In terms of growth, the growth is likely to come in. They have got new products, also some of which are US. They have got Eugene, which is based in Europe, and I think that would be able to supply to the US markets new products. So I would say that Aurobindo is a good hold even from current levels. And as an investor, it is better to continue to hold it. I would say that if you're maybe shorter term, I would say there could be some ups and downs. But if you're holding it for the medium to longer term, I would say a target of about 1,300 1 year down the line is possible.
All right, 1,300 down the line on Aurobindo Pharma. But with that, it's time for a quick breather. Don't go anywhere. We'll be right back on the. Welcome back. You're tuned into Buy Now Sell Now, where we are getting all your stock queries answered by our experts. Keep sending in your queries on the number that's flashing on top of the screen, and we'll get them answered by our experts. Let's resume then. Coming to you, Kunal, this one's for you. This is Krish who's writing in. He wants to know, he's holding MCX India 15 shares at a buying price of 6,105 rupees. He wants to know your view on the stock for the long term, and he also wants to add more at every dip. Now, Kunal, MCX was up 7% just yesterday, hitting an all-time high after they got the SEBI nod for the launch of electricity derivatives. So since it's already sitting at an all-time high, clearly this is not the time to add in more. How should one play this counter then?
No, in fact, my sense is that it's a good time where you should look to add further for MCX, even though the stock is perched at an all-time high levels, because when you see stocks rising up on all-time high levels on the back of some strong negative news flow, and that's generally an indication that the stock trend is here to last, sustain from a prolonged period of time. So I think even after yesterday's 7% move, fortunately today the stock is down a couple of percentage points. So which means you're not buying at the peak of momentum, but there's a slight correction which you can try and take advantage of. So I would suggest to buy on dips MCX even at current levels.
Okay, so that's the view on MCX, but we have a senior citizen S. Majunath who has written from Bangalore. Now he's holding some shares of Happiest Minds at an average price of 1080 since May 2022, but he's sitting with a loss of about 43% since his purchase. He's asking for a view on the IT sector, and Shahina, this question will be for you. Apart from Happiest Minds, he's also asking for a view on Coforge and Persistent Systems with a 2-year time frame. So what will your view be on the sector per se and these companies in particular?
So IT sector is another one sector which had not really performed, but now is starting to see some investor interest come back. Also, I would believe that all the three stocks that he's talking about look good at current levels. Happiest Mind, maybe for the shorter term, yes, you could see some bit of softness, but I think the medium to longer term still looks good. In terms of valuation, it has started becoming more attractive after, having consolidated over a long period. So I would say you can hold with a, if you would like, you can keep a stop loss close to about 590 type of levels, but you could hold for the medium to longer term. And I think Persistent in terms of valuation is little bit expensive, but at the same time, the growth is pretty strong. The numbers have been very healthy, so you could continue to hold Persistent also. And Coforge also is doing well in terms of order books. I mean, in the deal wins that they are getting. So I would say you can hold all three in the IT space.
All right, it's a hold on all three IT counters, but coming to you, Kunal, this is Neha who's writing from Bangalore. She says that she's making 30% profit on Manappuram Finance, SBI Cards and AU Small Finance Bank. She wants to know the targets for the next 1 to 3 months. She wants to know if she should wait for more profits or she should book out now.
See, if it's a 1 to 3 month time frame, then it's a good time where you can look to continue to hold on to the stocks. But then I think out of the three names which you mentioned, Manappuram Finance, I would believe that Manappuram Finance is where somewhere where I believe that you should start taking out maybe partial profits, if not full profits over here into the stock price, just because of the last 2 days of price action move. There seems to be a case that maybe the stock has entered into a slight overbought territory, and you might expect the stock to drift down lower or come back to retesting levels of 250 thereabouts in the very near term. So that could be a near term trade which can, if you want, you can probably look out for stocks like Manappuram Finance. But otherwise, I think all three of them are quality stocks. You can continue to hold on.
Okay, so continue to hold on to your positions in Manappuram Finance and other companies that we just discussed. But Sharmishta Malik has written to us from Kolkata. She purchased some 400 shares of Hindustan Zinc at an average price of 450 rupees per share. And she's asking for a target for the next 3 months. So Kunal, this question will be for you. Hindustan Zinc, it's at 537 currently. Where do you see the stock headed?
So again, short term wise, the stock is overbought on the indicators. I was looking at the RSIs and other indicators on the hourly charts. They seem to be into slightly overbought territory, which means that the stock from current levels should cool off. And so if it cools down to say 500 levels, then you might expect the stock as a 3-month target, to be say closer to 540 to 550 range. So all depends on how much will the stock correct, because of the overbought nature of indicators. If it drops down towards 500 mark, then I think over the next 1 to 3 months, you might expect the stock to be a little bit more ranged. And on the upside, 550 is where I would expect the stock to be in the near term.
All right, moving on to the next counter. Shana, I'll come to you. This is Deepak Dave, who's writing in from Gandhinagar. He has 30 shares for Raymond's at a buying price of 1,800. Wants to know if he should be adding more of this.
I think Raymond, he must have bought it before the team merger.
Right.
So yeah. So he's anyway making good money, and I would say he can, if he's holding, he would be probably holding both Raymond Life as well as the Raymond Limited. So I think he can continue to hold both. Between the two, of course, one has got the real estate, the other has got the textile business. So I would say both of them look good. He can continue to hold both even as of now, despite the rally that we've seen on a consolidated basis if you add both together.
That's the view on Raymond Group of stocks. But we have Hariharan, who has written to us from Bangalore. He is is asking for Shahina's view on Muthoot Microfinance. He's holding some 51 shares. What will your view be on this company?
Yeah, so Muthoot Microfinance, I would say that it's like it's actually come off quite a bit if you see the last couple of quarters, and from here on, I think it is possible. It's a small cap, 2,300 type crores of market cap. So from here on, I would say that it is possible that you could see some buying coming back because the RBI policy was pretty positive for the microfinance sector. And with rates coming down, I think they should do well. There's a lot of restructuring happening. They had made losses actually. If you see the last quarter, huge losses. I think they've done a lot of write-off. So from here on, you could see a bounce. You could continue to hold. You hold. Keep a stop loss. Keep a stop loss close to about 130.
Right, that's Muthoot Finance. But Kunal, Chitra is writing from Bangalore. She says she holds 150 shares of Praj Industries at an average buying price of 486. She's now sitting at a profit of 10%. She wants to know if she should be holding on to it or should she be booking out?
I think you should hold on because I think after quite some time you're seeing a gap on the weekly charts for Praj Industries in terms of candlestick. So that could probably be an indication that you are looking at a potential change of trend as well as maybe a change of intensity as well for Praj Industries. So that could have positive effect on the stock price in the near to medium term. If this gap is not closed, I think if I'm not wrong, that level of the gap on the downside is around 505, 510 mark for Praj Industries. You can keep that as a trailing stop loss. And on the upside, you might expect the stock to come back towards the previous major highs, swing highs, which is around the 580 to 600 range.
Okay, so that's the view on Praj Industries. Murli M has written to us from Bangalore. He says he's been writing to us for a very long time, but his queries are never answered. Apologies for that, and we'll try to cover many more queries that you keep sending to us. But today his question is on Siemens. He's holding about 100 shares at 3,245 rupees per share. He is asking for an outlook for the next 3 months. So Kunal, what will your view be on Siemens?
So after quite some time, the likes of Siemens, L&T, Cummins, etc., I think these stocks are making a very strong comeback for themselves. So that's a healthy sign that you're looking at the the capital goods kind of stocks. I think they are trying to make a comeback. So I believe in that context, Siemens is something which also looks attractive. But just be ready for a very gradual kind of an uptick trend for Siemens. So it may not be a high beta up move for the stock price because of the inherent nature of the stock. But I think at current levels of 3,300, 400 mark, you can expect a decent 8 to 10% upside over the next 1 to 3 months.
All right, moving on from Siemens. Kunal, again, this one's for you. This is Vinay who's writing from Gurgaon. He's bought 50,000 shares of Tata Steel at a buying price of 153. He wants to know his view for this week's trading. What is your view for this week's trading?
So it starts to look attractive in terms of a contra play. I think if the stock holds on to that 159, 160 mark on the spot levels as a breakout, that I believe could be a trigger point for the stock to start moving up. So it tried to do it today on the first, I think half an hour, first 1 hour, when it came closer to 159 mark, but then it's failed to cross over that 160 mark as a resistance. So it looks okay on the charts, but I think momentum would come back again once the stock scales past over 160.
Okay, so that's the question and that's the view coming in on Tata Steel. But we have Naveed who has written to us from Bangalore again. He's having about 150 shares of Varun Beverages at 560 rupees per share and he can hold it for another 6 months. Kunal, what will your view be on VBL? And there's also another question that has come in on sale, but first let's discuss Varun Beverages.
See, not too much gung-ho on the stock price. It's just that the stock has been going through a price drift and a price correction over the last 3 months or so. So from 550, 560 as a high, the stock is closer to 475, 480 levels, which means a correction of almost 15% has already seeped into the stock price. Maybe there could be some sort of a relief rally, but then I think it could just be a relief rally into the stock price rather than any major change of trend for Varun Beverages. So not too much gung-ho on the stock price trend. I think if you have better options, then you should evaluate that.
Okay, so not very positive on Varun Beverages, but what is your view, Kunal, on sale? He's holding about 1,050 shares at 86 rupees per share.
Yeah, that's a much better chart. In fact, we are now seeing that the metal counters You're seeing SAIL has been one of the better charts which has emerged in the last 1 or 2 weeks, because at a point where JSW Steel had underperformed, Tata Steel has been more or less in a range. You're seeing SAIL as a potential breakout candidate. So if you've purchased that two-digit mark for SAIL close to 85, 86 levels, the stock is at 134 currently. I think you should continue to hold on.
Okay, so SAIL hold call coming in. Coming to you, Shaina, this is Shankar who's writing from Tuticorin. He's holding 1,000 shares of UCO Bank at a buying price of 31 rupees. He wants to know if he can keep it for the next 3 months or switch to other banks like SBI or an IDFC first.
Well, 3 months you could see a bounce, but I would say it is better to switch, be safe in this sort of a market. If you're looking at a small cap bank, which is like something like, while UCO is about 41,000 crores, but I would say you could also switch to a small cap bank like something like a DCB bank, a federal bank which is closer to market cap in terms of UCO bank. I would prefer these banks. And of course, in TSU, SBI is looking good. They have given a good guidance also for the coming year. So I would say it is better to switch to some of the safer banks rather than UCO.
Okay, so that's the view on UCO and several other private sector banks, but we need to slip into a very short break on that note. We'll discuss many more questions on ET Now, and this is a show where we discuss all the queries that you keep sending them to us. But now we have a question that has come in from Sonu, who has written to us from Bangalore. Now this question is for Kunal in particular, and he's holding about 300 shares of LIC for more than 18 months at an average price of 970 rupees per share. And he's asking whether he should continue holding or sell this position off. What will your view be on LIC?
So just wait for some more time, maybe another 3-4 weeks. I think the stock price should come back to 975 to 1000 odd mark. That could be a much better level. But yeah, I think switching at those points could actually be a good strategy for your investments on LIC.
Okay, and he actually has a follow-up question. He is asking whether he should move on to Jio Financial Services or Hindalco. So LIC versus Jio Financial Services versus Hindalco. What will your view be?
Of course, it's a tough one to try and make a choice because both of them are differentiated sectors. But then if I have to pick and choose from current levels, looking at the recent recovery of the stock price and the lack of major negative news flow towards the sector, I would probably believe Jio Financial could be a far better bet as compared to the other.
All right, moving on then from Hindalco on the charts coming. This is Nikhil Sharma who's writing from Mumbai. He's an intraday trader and a long-term investor as well. He wants to know, is it better to buy KEC International for the long term or for the short term? Shaina, please take this question. On KEC International, is it a long-term bet or is it better off to be a short-term buy?
Well, it looks good both for the shorter term as well as the longer term. The order book position is quite good, and as well as the I think opportunity for the longer term. So it's both good short term as well as long term he can buy.
Okay, so that's the view coming in on KEC International. We have Reshma Bhatia, who has written to us from Pune, and this question is on ITC Hotels. Technical view, Kunal, what will your view be? She has about 315 shares at 165 rupees a piece. Currently sitting with 32% gains, and she's asking whether she should book profit. We already took a fundamental view, and Shahina did tell us that her view on the hospitality sector as a whole continues to remain very positive. But what will your view be on the charts?
Yeah, even my view is positive for ITC Hotels, and I think at current levels of 220, the stock has shown a good amount of evidence over the charts over the last 5-6 months that it's been shaping up very well from 160 levels, which was the low for ITC Hotels, to now 220 plus mark. Seems to be a trending stock. I would suggest a hold on.
All right, moving on then to the next counter. This is Vijay Kirthi, who's writing from Chennai. He wants to know about Gujarat Gas. 40 shares bought at a price of 680 rupees. What's the recommendation now? Should he average in or should he hold on to Gujarat Gas, Shaina?
He can average actually, but it's better to, if he wants to, he can hold as of now, but if he wants to average, it's better that he averages close to about 460 type of levels. But if he's holding it, he can continue to hold it. I would say that the gas prices are moving up for Gujarat Gas. They will get a better realization going forward. So it's a hold.
Matthew John has written to us from Cochin, Kerala. He's holding about 100 shares of IndusInd Bank purchased at 1550. Kunal, should he continue holding on to IndusInd Bank or just sell out of this position?
Yeah, I think it's a good time to try and exit the position. Unless the news flow starts to improve for IndusInd Bank, it's very difficult to try and preempt that the stock would make any kind of a major turnaround. And there are far more better banks available which are at the cusp of a turnaround. So I would suggest an exit on the stock and then come back to the traditional large cap names. For example, I think Kotak Bank, Axis Bank, these are the two stocks which are emerging as fresh breakout candidates. And then from the slew of mid cap names, there are plethora of stocks, whether it's DCB Bank, whether it's City Union Bank, etc., Federal Bank. These stocks are also looking fairly attractive. So pick and choose from that basket where there is a lack of negative news flow as well as more consistency in terms of price trends.
And because this stock has been in focus for the last several sessions on account of regulatory challenges, Shahina, what will your view be fundamentally on IndusInd Bank and several other private sector banks?
Well, I would say that they're better banks than IndusInd Bank that's going through a lot of issues. But RBI policy is quite supportive of interest rates coming down. So to that extent, and liquidity, main is the liquidity. There's going to be a lot of liquidity in the system. So I would say it is better to go in for the other banks. Like, for example, Kunal also has mentioned DCB Bank in the small bank. It's just a small cap bank. And in the larger banks, you have, private sector banks like HDFC Bank, ICICI Bank. So I would say there are a lot of banks that look more attractive than IndusInd Bank as of now.
All right, other banks that look attractive, more attractive than IndusInd Bank, and keeping up with the banking pack. This is Anu who's writing in from Gurgaon. She says she's a big fan of Kunal and she wants his opinion on Canara Bank. She holds 1,500 shares at a buying price of 117 rupees. She wants your view for the medium term, Kunal.
Thank you so much. So I think on Canara Bank, I would believe that the stock is at a cusp of a very strong potential breakout on the upside. I think closer to 125 is a resistance for Canara Bank, but I believe that in this leg of price uptrend, the stock should be able to scale past about this resistance. I would suggest to hold on to the stock and the holdings which you have for the stock price with a potential breakout expected about the 125 mark. Above those levels, you can expect levels of even 130 to 135 for Canara Bank.
Okay, so that's the view on Canara Bank, and we have several queries that have come in on private and public sector banks in today's show. Kiran has written to us from Pune. He's holding some 1,000 shares of Jindal SAW. The stock, after it reported its capex plans, the stock in fact is up 8 to 9% in today's trading session. He has 1,000 shares bought at 350 rupees per share. What is your view after the two-day rally? That's the question. Kunal, what will your view be? The stock is up 7% today.
Yeah, 7% up, and I think when I look at the charts on the short-term basis, it seems like that the stock, has seen a swift rally from its major 52-week lows. The volumes have run up, but then when I look at the charts, I think it still looks like that the stock is forming a lower highs and lower low formation on the medium to long-term basis. So if you're looking to buy, I would actually suggest an avoid at current levels and wait out for this momentum to cool off, because that's where the real trend would emerge. If the stock cools back again to say break below today's low or the gap which has been created today, that's a clear indication that the stock is still weak on the chart. So wait for the next couple of days and then just see how the stock near-term trend pans out for Jindal SAW.
All right, coming to you, Shaina, this is Venkat Raman writing from Hyderabad. He wants to know if he should, it is about a fresh entry that he wants to make, either in CESC or CG Power. He wants to invest 50,000 for the long term. So he wants to know which one is a better bet for the long term, whether it is CESC or CG Power.
See, CG Power is also a good stock to hold for the long term, but if you compare it with CESC in terms of valuation, it is more expensive. While promoter group for both are strong. So if you're buying as of now, I would prefer a CESC. They have got they are also expanding in the I would say in solar space. They have given good orders to expand in that space also. So I would say you could buy CSC, or you could buy it at current levels. You could keep a stop loss close to about 160 and look for a target close to about 180, 185 levels if you're holding it for the shorter term.
Okay, so that's the query coming in on several of these power companies. We have MSV Raghavan, senior citizen, who is writing to us from Chennai. He has a question on Birlasoft. He has about 200 shares. He's holding them for the last 3 years. Looks like a long-term investor. Shahina, what will your view be on Birlasoft?
Yeah, so actually Birlasoft has actually corrected quite a bit. It had given a bit of disappointment in terms of their performance in the last couple of quarters, but I would say that at current levels, in terms of valuation compared to rest of the small cap IT stocks, it's about 12,000 crores of market cap. It is looking interesting again going forward. They have got targets of crossing $1 billion of turnover. Over the next couple of, I would say 2 years. So one can continue to hold Birlasoft. You could hold it with a target close to about 400 and I would say 450 over the next 1 year. You could keep a stop loss close to about 410.
All right, so that's the view coming in on Birlasoft, a whole call coming in. Coming to you, Kunal, then this is Kabita Das, who's writing from Guwahati. Holds 1,000 shares of Bank of India at a buying price of 152 rupees. Wants to know if she should sell it now, or is there any possibility, for the stock to give an up move from here on?
I think the stock should see a decent up move going forward. Same rationale which I had for Canara Bank. In fact, for your position, I think if possible, say closer to 120, 125 mark range, if the stock drifts down to that kind of a mean reversion point, it's a good level where you can look to even average or add further.
Okay, so that's the view coming in on Bank of India. But we have a viewer who has written to us, Swati. She is asking for Shahina's view on Mphasis and SBI Cards. Wants to make fresh investments into both of these companies. What will your view be, Mphasis and SBI Cards?
I would prefer Mphasis over SBI Cards. I would say that the competition for SBI Cards is going to be, increasing. And Mphasis, I think after, some bit of disappointment in terms of the deal wins, I would say that going forward, it looks like it's going to be a better year. FY26 is going to be better than FY25. So I would prefer Mphasis over SBI Cards.
Right, moving on then from Mphasis and SBI Cards, this is Poonam who's writing from Punjab. She holds 1,300 shares of Equitas Bank at 82 rupees and 400 shares of IDFC Bank at 75 rupees. She has not given a question. I believe she wants to know what's the future for these two counters. Kunal, you take this.
I'll suggest a buy as well as a hold on both of these names depending on your current stance. If you already bought the stock prices, then I think both Equitas as well as IDFC First Bank, I think you should continue to hold on. And if not, then I think at current levels you can look to add. You may also want to look out for Ujjivan Small Finance Bank. That's also a chart which has been looking fairly attractive. Yes, the stock has run up, but then I think looking at the last 5-6 quarters of consecutive price uptrend, this could potentially be a big turnaround candidate over the near to medium term.
Okay, so can be a turnaround candidate. That's the view coming in on Ujjivan Small Finance Bank. But let's shift focus to metal counters then. We have a question that has come in on Tata Steel. And this question will be for you, Kunal. Praveen from Bangalore, he's holding about 25 shares of Tata Steel at 144.67 rupees per share. He's asking for your view. What do charts suggest for Tata Steel?
Hold on to the stock. As I was flagging earlier, that 160 is the breakout point for Tata Steel. Once the stock crosses about those levels, that's when I would believe that the momentum would come back again into the stock price. So just wait out for maybe another few odd days for the stock price to try and attempt this break of 160 mark. About those levels, you can expect stock to hit levels of even 170, 175 kind of a territory over the near term.
All right, moving on from Tata Steel to the paint counters. Interestingly, paint counters on this day. Coming to you, Shahina, Vishal is writing from Dubai. Wants to know that can he switch from Asian Paints to Grasim given the increased competition in the paint industry? Advantage with Grasim is that he says it is also its holdings in Ultratech Cement. He's holding Asian Paints at a buying price of 3,212, and Grasim he holds 50 shares at a buying price of 1,644. Now, Shahina, as far as Asian Paints is concerned, it has been consistently been eroding investor wealth. In fact, and we have also had a note by JP Morgan that has downgraded the stock. In fact, they have cut their target prices as well. So he's bought it at a price of 3,200. From here, how should he play this now?
Yeah, it's a good switch. Asian Paints, basically, while Asian Paints is suffering, I think across the board in terms of performance as well as in terms of valuation, it has been expensive. So any disappointment in numbers actually sees the stock correct, and it has corrected quite a bit. See, from here on, it may consolidate for a long time. I'm not saying that it will go down from here, but to get a return on your investment, I think Grasim makes better sense, because they are doing quite well in paints. In fact, surprisingly, the performance in the paint segment has been much better than what was estimated earlier. As well as Ultratech is doing well. You have their carbon black that is doing well. Textile is doing well. Paper. So I think Grasim is though it has holding company discount at current levels, Grasim looks like a better switch from Asian Paints if you're holding for maybe the next 6 months to 1 year.
Understood. So that's the answer coming in on Grasim Group of companies. But we have Punita, who has written to us from Coimbatore. She's asking for an advice on Karnataka Bank and IDFC First Bank, and also on TCS. What will your view be, Shahina, on all these three counters?
Well, Karnataka Bank is doing quite well for itself. It's a smaller bank. Of course, if you ask me between Karnataka Bank and DCB Bank, I would prefer DCB Bank or even a federal bank. But by itself, Karnataka Bank in the smaller bank space is doing well. Then you asked for which were the other two stocks?
All right. On that note, we're completely timed out in this edition of Buy Now Sell Now. Kunal and Shaina, thank you so much for taking the time out and joining us and answering all the stock queries for us. But with that, it's a wrap on this edition of Buy Now Sell Now. But before we go, let me quickly check in on the AMFI data that's trickling in. We will also very soon get the SIP numbers coming in. But as far as the total inflows are concerned, it stands at 29,108 lakh crore rupees versus 2.76 lakh crores. This is on a month-on-month basis. As far as the equity inflows are also concerned, that stands at 19,013 crore rupees versus 24,269 crores on a month-on-month basis, which means that there has been a bit of a moderation coming in as far as the equity inflows are concerned. The total AUM stands at 72.2 lakh crore rupees versus 70 lakh crore rupees on a month-on-month basis. A slight uptick coming in there. And equity AUM stands at 32 lakh crores versus 30.6 lakh crores on a month-on-month basis. A marginal uptick coming in on equity AUM and the total AUM as well. But there has been a moderation in the equity inflows as far as the AMFI data is concerned. We are waiting and watching out for the SIPS number also to come out anytime. We'll get you those details. But with that, it's a wrap on this edition of Buy Now Sell Now. Ashish and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Markets at noon. Take the action forward.